Hi everyone, my name's Aled Phillips, Chartered Financial Planner and Operations Director at Niche, and today I'm going to give you a brief market update as volatility has continued in financial markets over the last week. First of all, I'd like to wish you all well. Wales is going into a full circuit break lockdown on Friday, as areas such as Manchester are also going into tier 3 lockdown, where we have a number of clients, so I hope that you and your families are all keeping safe and well. So we've seen continued volatility in financial markets as we'd expect. There's been some good news this week. Barnier stated that a trade deal is now looking more likely. And also the Deputy Governor of the Bank of England stated that negative interest rates it's looking less likely that negative interest rates will be required, which is good news for the economy and positive sentiment from the Bank of England. And despite this, we've still seen continued falls in the FTSE. Usually when the pound rises, as it has done this week on the Brexit news, the FTSE will fall. And the reason for that is that many of the FTSE companies are exporters and therefore become less profitable when the value of the pound increases. And it's often a client question, when good news comes out and the pound goes up, then why is the market going down? And that's the reason for that. But we have seen in the last few months, when there's been some good news, particularly around Brexit, both the FTSE and the pound have risen, which didn't happen this time. So the pound rose and the FTSE fell slightly. So this may cause concern for some of you, but many of you will now just be very used to market volatility. And these movements are no more than we'd expect. There's also been volatility in the US market, which has been caused by conflict in the Senate between the Republicans and Democrats around the availability or the volume of funding, or the next stage of funding that's going to be available for COVID in the US. That's further compounded then by the upcoming election and the impact of either Trump staying or Biden getting in, and how that will also delay the funding. And we saw that had, in turn, a negative impact, obviously, on the UK market and on the Asian markets as well. So, as I've said on previous videos, we account for all of these factors in ongoing planning, and volatility is certainly expected. There has been also some good news in that companies are reporting in the US at the moment. Banks reported last week better figures than anticipated, and analysts' predictions this time are a little bit more subdued, which gives potential for upside, certainly in the US markets as well. We account for volatility and movements in your financial plan by stress testing. And I would suggest that any of you, if you are concerned, don't hesitate to get in contact with us, to get in contact with your advisor, whether it's just an update on where the market is, or if you have any concerns. We can set up a video call and run through your financial plan, run through your overall strategy with regards to pensions, investments, etc., and the effect of this volatility. And quite often it's just a case of putting your minds at ease. So I hope you all keep safe, and as I mentioned previously, any queries, please don't hesitate to get in contact with us. Thank you.